Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on July the 15th, 2020 with a live Forex market analysis and live trading webinar for you. We're going to pull up our disclaimer real quick just to remind you that this webinar is for illustrative and educational purposes only. And remember, this is in a lag time, it's streaming in behind, so please just use this for only educational purposes only. And with that, we're going to give you a quick little plug to high probable Japanese candlestick patterns available on Amazon.com in paperback and Kindle versions. Check it out. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets, and also make sure that you subscribe to this YouTube channel as well. All right, we are at the Forex-Unlocked.com website. We have the workstation page already pulled up, and we have the Euro US dollar here to look at. Now, what is going on with this? This market has made a higher move high today, but however, it has fallen off of it. We do not have a signal here. We are watching this trend go higher. We have a signal in the US dollar Swiss, and we will cover that when we get to it. So right now, the Euro US dollar is making a bigger move, higher move high. On the longer grand scheme thing of things, it's interesting because on the monthly basis here, this market has been in a downtrend since the 2008 financial crisis, irony of it all. And since then, this market has continued to trade lower, and especially into 2020, where it seems to have been stabilizing. Interestingly enough, this market had set a bottom back here in 2016, a high in 2018, in which now it has bottomed here in March of 2020. The question is it going to break out to the upside, or is it going to fall apart? So on the daily basis, we've been making higher move highs. I think your key level, though, is still going to be the high that was set in March. So a failure to take that out would be negative and have us in a sideways to lower trade. A rally above this level here is a big deal because it has us butting up against this downward sloping resistance. So we'll see how this manifests. We are short-term bullish, obviously, on the intraday in the intermediate term. So longer term, super long term, obviously, we are coming into critical resistance area. So we'll see how this market reacts. Off of the higher move high, we finally broke out and set a higher move high from June. And we'll see how this maintains itself. Right now, it on the daily basis, after being strong all day long, about an hour and a half ago, the bulls started to fall out of bed. So most likely I'm looking at it as probably profit taking, considering we've had a nice run up over the past 4 sessions. We'll see what happens. For all we know, this could be just a pause before the cause, and we have higher move highs later on this afternoon. But if we do, that means we have divergence going on in the European currencies. So let's look at the British pound US dollar. So we looked at the euro, which is the #1 component of the dollar index, helping to press the lower move lows on the index. As you can see, the British pound US dollar has also rebounded today, and it was pressuring resistance. It did not make a higher move high, but it is still in the upper part of its range, coming off of resistance. This market here is also in a pretty much sideways trend, but short-term slightly bullish trend as well. So we're watching to see how this unfolds over the next couple sessions. Now, let's just say that we get a failure in these currencies over the next day and a half, and they reverse gears in a big way. Is that bullish the dollar overall? No, but it's due for maybe a little correction. The question is, the euro has been in a range trade for, a very long time, on a multi-month, and even a couple years time frame. So that's a big deal. Just because we're swinging around and pressuring resistance doesn't mean we're going to have an overall major run-up and dollar collapse. So I'd be careful, even though I'm bearish the dollar in the longer term, especially because the trend is your friend. That's the way it's acting. It doesn't mean that there aren't situations out there that could have the dollar screaming higher in a very, very short amount of time. We have some interesting pricing issues going on in options markets and equity markets around the world, as well as interest rates too. The short-term interest rates climbed in price, down in yield extremely fast and furious not too long ago, and the 30-year is now starting to finally catch up with that again, which gives me a kind of a leery feeling that the market in the longer term sense is gauging everything that's going on and is not really happy with the outlook for the future. Not necessarily pessimistic, but not necessarily as optimistic as it seems to be going. And this is one of the things I want you to take a look at now. Here we have a market that has given us one interesting thing to talk about and look at today. So this market had set a lower move low last week and looks like it had bottomed. Now the one thing that it did do here is it gave us a little buy signal here. This is a high probable Japanese candlestick pattern. It's one of my favorites. Read the book and you'll find out what it is. And then the key is that today this market looked like it wanted to take out the low, which is going to be our main barrier here for as far as what we're looking for support. Does this market mean, does it mean like it's bottomed? Well, we don't know yet, but the thing is that today it tried to hit support. It didn't make a lower move low. In fact, the high here a few days ago was 94.37, and now 94.39 is the high today. And as we're talking, we're making a higher move high. So this is divergence, what we have going on here. So we have a buy signal going on in the US dollar Swiss. I'd be very cautious about being overly bullish here. However, this has been in a downtrend. We have just bottomed here last week. We came up. We made a lower move high. We just made a lower move low today, and now we just took out the high from 2 sessions ago. So the question is, on an intraday basis, since we have this market bottoming, I think you're going to most likely see a corrective phase. It has this market coming up back towards this 95 area. The key level to get across and bridge would be most likely right around, I would say, this area right here, right around 95.04. So if we get a rally above this that sustains a trade above this, well, that just lifts our range. I'm not saying we're going to parity or getting a major dollar bull, but while the dollar is getting beaten up, for some reason, in the Swiss is a flight to quality currency. This is the one where it's getting some relief, and the dollar bulls are getting able to make a little bit of a play. So we'll see how this manifests. We do have this buy signal in place, and to give you kind of an idea, you got to read the book so you know exactly how to play this little trade here, but we're going to give you an idea just off of this. So let's just say if we go back to this high in March and this low here that we just set last week, if we use that as our base of comparison for some pricing here, then we're going to look to see, let's see, we'll go by today. We actually got to go by right here. So this would be our 50%, and this is the same as a 0.618. All right, so this is our target zone here. All right, so for our upside rally potential here for the Swiss, and this would be on a longer term basis. We're not talking about over the next few sessions. We're looking at a week. This is going to take a few weeks to manifest, most likely, if this correction was to get pushed. But then even still, we have this barrier at 95.04. So I would say only if we get a continuation above here, with the likelihood to come into this area up in here and get into this target range. So don't be overzealous thinking that I'm saying we're going to have a nice corrective move up to here. This is a very good potential here if this buy signal here is solid. Now, just as we have those numbers, I also have this number for you. So don't get overly nuts about where this market can go to, because we're almost there. So if you look at an intraday basis and on the short term, we are almost in the target zone that this market has the potential to get into, and that's right here. So short term, we have this area, and this has a good chance of reaching this. I wouldn't say that it will, but considering that we're buffering under it right now and pressing higher move highs, I would say that sometime between today and tomorrow we have a good chance at spiking into this area. That could become a very big area of resistance. That may be where it runs out of gas. So this buy signal here, it targets this spot right here. Longer term, we could have it set up to here, but that would be on a multi-week basis, not on an intraday basis. So intraday, we're almost at our target. We actually, just to let you know, and you can see on our trading platform here, we are along the Swiss right now. we had a position on that had been, we had made some money in, then we reloaded and got stopped out on the slide that had happened overnight, and now we had gotten back in because after planting that low today and seeing how the run up in the other currencies with this, we are looking for a nice reversal here. So we only have, this is the only trade that we have on right now currently. After getting a little chopped up, we have a slight little win on that one. So a little dicey, not many signals this week, but you know what, you can't force it. That's what you have to remember. So now the one thing that we have here that's really surprising is the US dollar Japanese yen. Like, you want to talk a market that aims to either confuse or disappoint. It has great swing points, but then it just dries up. But the past few sessions from last week going into today, we've had increased volatility and definitely laying on support. So now the funny thing is here is that while we've been hammering this, we came off this low here. We had made a higher. We had made a lower move low, high here. We made a higher move low here. We made a lower move high here, and now we're making a higher move low technically right here. So this is big sideways. I don't know what to expect here. All I know is that I'm very surprised that while we're having a lift in the dollar versus the Swiss, and it's just getting battered by everyone else, that the yen is actually making a move. I mean, the other markets have been trending and having big trend days, and the yen won't go anywhere. Today, it seems to be participating in the volume of dollar selling and other currency cross buying. Obviously, over the past hour and a half, we're coming off those highs and lows, most likely because of profit taking that is going on. Now, one thing I would also be kind of mindful of is to take a look at how the US dollar index settles today. It made a low back on June 10th, and as of today, it's flirting with a newer move low. If we get a negative close today in the dollar index, then I think you're going to have a very, very good chance to see more pressure for sure with the major currencies versus the dollar. Now the yen, just like the Swiss, we have a buy signal, whereas the dollar is under pressure even in the yen. I want you to notice what's going on here. Most of these days here have been contained in a very tight range, for one, and then also a bulk of trading has occurred in this area where we're at right now. Isn't this interesting how if you look at where we're at, we're hanging on that pivot point. Maybe we come back down a little bit more, but it seems like we find support where we did a few weeks back, and that where we're trading right now, and even though we're riding on support, this seems to be a big pivot point that we bounce off of. Now, not necessarily, like I said, doesn't mean that we're going to get a big rally, but I would use caution trying to play directionally. I think range traders, without a doubt, are going to continue to be the ones that pretty much profit from the trading that's going on in the US dollar yen. The ranges aren't exactly that tight. The swing points, when they happen, are good, but like I said, we don't get very much of that. We get a week and a half of trending, and then basically we settle into 2 weeks of all this sideways action here. And even if we look at here, we're not getting most days aim to disappoint. So I'd use caution with the US dollar yen. Right now we don't have a signal, except for that we did have this one sell signal here, but this came into this pivot point here. So it was in between this high here and this low here with this sell signal. That hit its point. Just like we had this buy signal here, we had this bullish engulfing line that came, it just fell short of our target, and then it had this sell signal. So that signal didn't fail. It was a little bit more in the break even, but it didn't. It just came short of the target, which was rather disappointing. But now we have this one here, which definitely has us pretty much where it bottomed at here for the target. So this trade is done, and that sets us up for what, a big neutral, because we're coming off a higher move low and a lower move high, which sets us up for an indecisive trend. So we're not going to get very much to go on with that. But now let's look at the other part of this trading zone here, the Australian dollar, US dollar. This market too is hammering the dollar, and it's hanging right below some key resistance, trying to break out to the upside. This market has been buffering and rallying highs since middle March. obviously sideways over the past couple of weeks, failing to break out to the upside and take out the June high. Today it looked like it was going to, but now it's fallen back into the range. So maybe we have profit taking going on once again, because there was so much momentum over the past 24 hours in selling the dollar, and we're also coming into critical resistance. One interesting thing is, remember I mentioned divergence with the US dollar Swiss. While the dollar is, that's the only place it seems to be gaining right now, even though it's slight. It's getting hammered everywhere else. The New Zealand dollar, US dollar, it actually made a higher move high last week, breaking out to the upside barely, and then trading lower. And now today it's trying to lift itself again. This market is also in a holding pattern consolidation phase. So we'll look to see whether or not, I mean, right now the trend is your friend. I would hate to say, I'm not trying to call a turning point. The US dollar Swiss is called divergence. It can go where the dollar is going to be bullish against the Swiss, and it could rally for the next couple of days, the next couple of weeks, the next couple of months, and it could go the opposite way with all these other currencies, including the European ones. And that's the thing, is that not that they've been trading totally together, but when we've had big days like this where the dollar is getting excessively either strong or weak, they typically have some similarities in their trading, where we haven't had that. Recently, you've had the euro that's only been trending higher, the pound that's been inching higher, grinding its way, and then we have the Swiss, which has been in a bear trend for a while, and the US dollar Swiss, and now just like the euro and the pound, because it's converse. And now all of a sudden we have a short-term buy signal and a lifting of support for dollar bulls versus the Swiss. So that's going to be a very interesting scenario to see how it pans out. Today's close with the dollar index is going to be big. We are waiting on some signals. We don't have it. The trend is your friend. I would stick with it, whatever side you're on. Don't try and fade these moves. Let's look at the US dollar TRY. Now this is something that's very interesting. Some of your medium crosses, this one here has been flatlined now for a month. So what does that tell you? That tells you that when you start to see your medium currencies flatline, that spreads between other intercurrency crosses are changing and volumes are changing. And also it means that the dollar may be a bear versus some of the majors, the big majors, but look at this, versus the TRY, which it's been a bull for a very, very long time, and they have all kinds of issues. It's not going anywhere. So that is a very interesting scenario. You do not see this very often. And to show you another case like this, we have the US dollar Mexican peso, where we had been going sideways now for pretty much the past month and a half. Dollar's under pressure here, just like it is in the majors, but also here we made a higher move high, higher move low, then we made a lower move high, and now are we making a higher move low, or are we going to take out the low, and then which means that is bearish the dollar, and if not, then we are probably stuck in sideways. So this is another range trade scenario, and I think that people need to be cognizant of this. Let's just say that this US dollar Swiss doesn't become a bull, but it starts to go just sideways. And then we have the US dollar yen, which also starts to tighten up. And we have the Turkish lira and the Mexican peso that are consolidating more. Then that's going to give less of a reason for the dollar index to fade very heavily. Doesn't mean that the euro and the pound, the two biggest components, aren't going to bash that index for the next month or so. It could be a day, it could be a year, who knows. But we're starting to see this divergence, which means the dollar index is not necessarily going to be the best indicator for dollar direction moving forward. We have to wait for some signals, that's for sure, in our major currency crosses. So the trend is your friend. If you're on that side, I'd roll with it. Then we have like here the US dollar Canada, which has been going sideways now for a while. You know, we filled this gap here down in this area, and now we're basing. Are we negative? Yeah, we're negative on the day, but we were up for 4 days straight. Could it be profit taking? Maybe. Now this market still is hammering support. It's not coming off of its lows. So that's what we're saying. We're having divergence in the currencies. So there's definitely a dollar bears that are out there, and they're looking for buying opportunities versus other currency crosses. So that's where we're looking at, buying dips versus the dollar in other currencies, especially the majors, until we get a signal. Right now, a lot of sideways formations are setting up, and that starts to tell me that as the more currencies that start to go sideways, the more likely we get to other currencies like the Euro US dollar, where we started off our webinar, where their trends are most likely going to not necessarily be ended, but put on pause for a little bit. So it wouldn't be out of the realm of possibility to see us start to develop a range trade here below $1.15 down to $1.13 and kind of see if we can get a base. Or who knows, maybe the dollar reverses gears, gets some strength. The US dollar Swiss is an indication of the dollar turn, at least in the short run. Remember, you get your biggest corrective moves when you're in a counter trend. You know, those corrections are the biggest moves. So now we're hanging right below or above the new move lows, which would have us at the bottom of this range that we've been in basically for the past month and a half. Could we spike low and then reverse? Absolutely. Overall, we're in a bear trend, and today it's looking bad, yet just as bad as yesterday, and we'll see what's going on with that. Let's go look at the pound US dollar as we wrap up things. So this market too, it's in the middle of its trading range now. It failed to make a higher move high after making a higher move low. If this market falls out of bed and takes out the low from yesterday, then we're looking at a short-term turn in not the dollar, but obviously for the pound US dollar, but then also putting maybe the dollar slide on pause. So we'll watch how these things manifest over the next couple sessions. We're right here at the midpoint of the week, hump day, and right now we have a lot of action going on, and definitely we have the volatility and opportunity. So just make sure you have a trading plan, folks. You always use your signals and stick to it. Don't try and alter it along the way. Bad things will happen, trust me. And while you're at it, check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And then also make sure to subscribe to our YouTube channel, Forex Trading Unlocked. Thank you.